Oh, okay. Well done. How are you doing today? Hope your day is going great. Good morning, good afternoon, good evening, depending on what time of the day you're seeing this video. We've gone through some things in the basics. I thought it's going to be a very quick one, but we are still on it. We In our last class we talked about lot sizes and how important they are, and I just want to give a quick wrap to that and go into the indicators. Yes, and I told you we open our MT5. Okay, this is MT4. Sorry, open our MT5. Now, when you open our MT5, like according to the example I gave in the last class, if you are using 0.01 lot size, it means when the market is bullish, when the market is bullish, that is when the market is going up, um, you are saying that if it goes up by 1 point, please add 1 cent to my account, and if it goes down by 1 point, take 1 cent from my account. And like I told you, the cent can add up to become hundreds, can add up to become hundreds of dollars, thousands of dollars. We'll see practical. Now the trade I took is still on. Is still on. Yes, you can see them. The one for 0.1 is losing um, um, 10 cents anytime the price goes against my prediction, and it's gaining 10 cents anytime the price comes um, in accordance with my prediction. Now, if you see before I took those trades, I had already taken some trades. Like here, you can see this is a trade, and if you check the lot size I used here, this is 2.0. It means that as the price is going according to how I predicted it to, I'm getting $2 per point movement. And before now, the price was I think around minus 1,000. Now it is plus 600. And another thing you must notice is that anytime your numbers change to blue, you are making profit. Anytime it's on red like this ones, you are making a loss. And if you close the trade at this time, you have actually lost money. Now you might want to ask, how do we close trade? You go to the currency pair or to the commodity you want to close. You long press it. Let me use the last one as my example. You long press it. You can see it's bringing close position, modify position, new order, chart, and the last option here. But let's talk about position. Once you tap on it, it's bringing the position to you. Can you see that? Is bringing out this close position. Once you tap on this close position, the price will close. So let me tap on it. You can see it's trying to close the position. I think it's the network. So just hold on for it. If it doesn't go, let's hide this. Once you hide, it will close, and then okay, it didn't go. So try it again with long press, close position, then we tap on close. I think the network is really bad. It's not going. Okay. So once you just do that, it will go. Now, I don't know why it isn't going, but we'll talk about that later. Now, if you tap on this, if you long press on it, you can see close position, modify position. Modify position means that in case you want to change some things, like this is where you put your stop loss, the SL I told you earlier. This is where you put the stop loss I told you earlier. Let me use another pointer. This is where you put your SL, and this is where you put your take profit. Now, what is the SL and the take profit? They are the price that you want to get to before you say, I have had enough, whether in terms of making profit or losing money. So that is what the modified position is. If you put a number there that is acceptable by the system, it will give you an example. Let me just get a number here. Let's assume that let me go to this chart. Let's assume that, let me go to the 1 minute chart so you can see it very well. 1 minute chart, yeah. Now you can see I predicted that the market is going to go up. It's going to be a bullish market, but as it is now, it's going to be a bullish trend. It is bearish now. You can see the price is down here. Can you see price? Now you might want to ask, why do we have this green and the red line always following each other? This green line is actually the actual price the commodity is, euro US dollar is, and the red line is the price that the broker is taking in at. That is why sometimes you will notice that when you take a trade, whether you are buying or selling, you are always entering at a minus. It's telling me it's just getting receiving my order. You are you are going to come in at a loss, always at a loss. That is how it is designed. Now, if you check on the two trades I took here, look at this one. When this one is losing minus 5, this one I see is 0 minus 0 point something. That's to tell you the power of lot sizes. If I decide to use a 10 minutes, a 10.0 lot size, 10.0 lot size means that 10.0 lot size means that each time I make profits, each time I have one pip movement, give me $10. If it goes against me, deduct $10 from my account, and that is not what you can see from the trade we took. The price is going down from on the 1 minute time frame. You can see the price is going down. You'll be like, I've lost money. And if you close, you might, if you know what you're doing, you might sometimes need to wait. Then okay, today I want to talk about different types of traders. The first type of trader, we call them scalpers. Scalpers. What do? They come into the market, they just quickly enter the market, and within 1 to 5 minutes maximum, they've traded, they've taken their profit, and they are gone. And scalping is a good strategy if you know what you're doing. Then the second type of traders are called intraday traders, or we call them day traders. What they do is they trade within a particular day. All their trading lasts within one day. It doesn't surpass one day. They can trade within 5 hours, 10 hours, 12 hours, 20 hours, but it doesn't surpass 24 hours. Then we have the third set of traders called the swing traders. Those ones trade between 2 days to 3 weeks. Some go as far as 8 weeks, 6 months to on one trade. And these are the people that actually make the bulk of the money in Forex. Because when the market, they have done their predictions, knowing that whole price is going to go up or go down, it's going to be a bullish market, a bullish trend or a bearish trend. Yeah, I didn't talk about trend when I was talking about terminology. So let me talk about what a trend is. A trend is the general flow of price. Like if you check, you can see that the trend here was up. Price was going up until now. It is now taking a downward trend. Can you see? Price is taking a downward trend now because that is the trend on the 1 minute chart. Now, if you go to, let's go to the 4 hours chart. Let's go to the 4 hours chart. Let it load. On the 4 hours chart, you will see that, okay, okay. On the 4 hours chart, okay, let me start from, okay, yeah, here we have a bullish trend here. Price went up. Can you see that? Price went up here. Now, can you see? We had a bullish trend. We had a bullish trend here. Can you see price going up here? And okay, then let's go. Let's find a bearish trend. Good. This is an example. You can see here, price came from here and came down here. Can you see that? So these are examples of trend. A trend is the general flow of price over a period of time. On the 1 minute chart, the trend might sometimes differ from the trend on the 4 hours chart. Remember, I told you that on 1 minute chart, one candlestick forms every minute, and on 4 hours chart, one candlestick forms every 4 hours. So that means before one candlestick forms on a 4 hour chart, a lot of candles will have formed on the 1 minute chart. So in summary, the 4 hour chart is a sum total of what has happened several minutes in the 1 minute chart. So the 1 minute chart is like telling you a more detailed breakdown of how the market is moving and all of that. So that is just the difference between those time frames. Okay, Now we'll still go into the best time frames to trade and all of that, or the ones that I use to trade. But in this class, I just want to take it easy. Now our chart is still bare. How do we add indicators? Because I told you, yes, there are some people that trade like this. They just look at the market, the pro. You can just trade like this. You know what you're doing. You know that market the price is eventually still going up or still coming down. But if you want to, if you are just starting out, you need what we call indicators. Some people will advise against it. If you don't feel comfortable with them, you are not supposed to use them. But I feel you should at least start out with indicators. Then when you now learn the patterns and how the market works, then you can decide not to use them. But indicators, what are indicators? Indicators are what help us predict price. It's just like the trafficators in cars. It tells you, oh, the car driving in front of me has applied brake. Probably there's something in front of it. So while you are rushing behind it, what do? You apply your brake because you can see the brake light. The trafficator is telling you, oh, that car has applied brakes. That is exactly how indicators work. They give you a signal as to what way price is most likely to move. Yes, they won't tell you to either buy or sell. They'll just give you an idea based on the data. Because these candles that we see, they are just giving you a pictorial data of how price has moved over a period of time. So the indicators give you that. And before we go into indicators, yes, there's another terminology we need to learn. That is the first one is called support, and let me write the RT. And the second one is called resistance. 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 So now support and what are support? What are resistance? Support is the the like a base where price cannot break through. Is a place where price cannot break through. Like I'll give you an example. Like as it is right now, as from this chart that you are seeing right now, you will see that here price has not this green line. This price has not broken through this place. This place is called our support. Support is just like what holds something up. It's holding up the price. If price breaks through this point that I pointed this arrow, then this place is no longer our support. It becomes resistance. What is resistance? Resistance is like a roof, a ceiling. Like in this case, price has not broken through this ceiling. So it's that's the support and resistance. Resistance, what does it do? It tries to push price down. Support tends to push price up. But sooner or later, price is going to either break this resistance to the upside or break support to the downside. Whichever way it does, when that happens, then another phenomenon occurs. But first, understand support and resistance. Now that you have understood support and resistance, I hope I'm being clear. I hope I'm not too fast. And I've explained the lot sizes to you. Now, let's go into setting up our indicators. Now, to set up our indicators, you tap on the screen, tap on your F sign. After tapping on the F, then you tap on this blue F, you tap on it. So you tap on it. When you tap on it, the first thing you look for is Bollinger Bands. I do Bollinger Bands. So you tap on that Bollinger Band. Once you tap on it, leave the setting the way it is and then just tap on save. Now let's see how the Bollinger Band looks. You tap on the back arrow here. Tap on the back arrow here. Can you see that? So once you tap on the back arrow, see it here. Once you tap on it, let's see how the Bollinger Band looks like. Oh, you can see, yes, you can see that we already have lines on our chart. Now, the lines on our chart, they are kind of greenish. And you can change the color if you want. Like me, I don't like this color. I need to change the color. So I go back to the F. I go back to that F. I tap on it. And then I go to Bollinger Band. Yes, you see this color. Let me point to it. This way. You see that? You tap on it. Once you tap on it, you can change the color to whatever color you want. And this side tells you how sharp you want the color to be. If you want the green to be very faint, or if you want it to be very, very visible, that is what this one. So you can turn it up. If you turn it up like that, the green will be very visible. And if you take it back like this, it will be very faint. To be very fair. If you put it off like this, nobody will see it. So you have to make it very visible. Now I prefer the color blue. I think this is blue. Okay, so we'll set it. Let's see how it looks. You can see blue. Now we have the Bollinger Band. The Bollinger Band usually comes in three pairs. One is this place is like our resistance that I told you about. This place is the support, and we have a midpoint, which can either act as support or resistance, depending on where price is at the time. As it is now, price is below the midpoint. So this midpoint now is a resistance to price at the moment. It can be when price breaks through it to the upside, it will be support to price. So that is what that is. So we are done with our first indicator. Then we have three more to go. Then we tap on it again. We go to the same F sign. We tap on the blue F, go there, we find moving average. Yes, I've seen moving average. Go to moving average, see it here. We tap on it. So tap on moving average. Once you tap on it, now once you tap on it, the first moving average you have here, you leave it at you change the parameters here. To change the parameter, you tap on this number, you change this simple, you change it, then you leave every other thing. Then we change, of course, we'll change our color, then we'll make it more visible. Those are the things we are doing here. So that's what we are doing for the other. So let's go. We start with the number, we change it to 20. Then we'll go to exponential. We'll tap on that simple. We'll see a drop down. We'll go to exponential. We leave it at close. Then we change this one to color yellow. You can use whatever color you like. Then I'll make it more brighter. Let's see how it looks. Sorry. Let's see how that looks on our charts. Let's see how that looks. Okay, you can see the yellow line is up now. Okay, so let's go to the other two more to go. After this, I think we are done for the third class. Then subsequently, we can now talk about other things like reversal patterns, different types of candlesticks, and all of that. And please, I'd like to tell you, this is just a short course. I don't want to go real deep and bore you with some details. So there are times when you have to go and do some studies on your own. Thank you. So let's go into the third one. We go to the same moving average again. Tap on moving average. We change the number again here. The point, we change it from here to 50. We go to exponential, and then we change our color here to black, and we'll make it visible. We'll save it. Then we have it saved. To see how it is, let's go back. You can see, do you notice some black and yellow line? That is our second moving average. Then we have one more moving average to go. I will explain the importance of this moving average in the next class so that this class doesn't become too lengthy. All right, we go in there, tap on the blue F again, tap on moving average again for the last time. And then here, this time around, we are making it 200 and we are going to exponential. And this time around, we are leaving it at red, color red, and we're just making it more visible. Then we'll save. Then we are done. Now we are back to what we had earlier. This is how our chart looks like now. And as you have applied it here, any part of the chart that you go, if you go to 1 minute chart, is there. You can see the line. If you go to 5 minutes chart, it's there. That is load. It's there, and this is it's loading. Okay, it's there. You can see it's anywhere. You can see it there. This is the 4 hours chart. This is the daily chart. You can see. You can see all your the Bollinger Band. Those are the blue lines. The yellow line is the 20 moving average. Or we call it moving average 20. Exponential EMA 20. Yes, that's what we call it. Exponential moving average 20. Then the black line is the EMA 50. That's exponential moving average 50. Then the red line is EMA 200. I will explain more about those ones in the next class. Yes, I'll call this class a wrap. Thank you so much for listening. Thank you for taking your time. Please try and give me feedback. If you have questions, please ask questions. I really appreciate them. And subscribe to my channel. God bless you. Bye.